estate is responsible for a large impact in global warming. So the covered bond market, which is all about real estate, can play a very important role.
Green funding is happening as part of green corporate strategy. It's taking longer than we maybe wish for, but nevertheless it's becoming a reality, and I think by now we can see signs of greenness popping up left and right, a bit like springtime. Basically various type of initiatives, standardization initiatives, rating agencies looking at it, and I think also institutional investors expressing more and more the need for, let's say, sustainable criteria as part of their overall investments.
Our inaugural green bond, which was 4 times oversubscribed, and the number of totally new investors to that bond. So there were 15 investors in the order book that have never before bought a bond of our bank, be it senior unsecured or a covered bond.
We have pretty clear ideas for an initiative which would be a private bank financing initiative to support households in the energy efficient improvement of their home. The idea really is to incentivize borrowers financially by way of preferential interest rates or a cash advance, more cash at the time of origination, to move their properties from the brown zone, so energy rating D to G, into the green zone, so energy rating A to C. And to do that, we need a very clear incentive chain. So each of the actors in the chain needs to get benefit from this initiative. And what we also need is a set of very robust indicators to measure the energy efficient improvement of the property. And on that basis, we can identify an energy efficient mortgage, and we can also label that mortgage and then earmark it for the purposes of covered bond funding.
What we see is that the performance of sustainable buildings is not only good for the environment, it's also good for the value of property. So from that perspective, you could say that it reduces the risk of the portfolio, and hence you could also expect some reduction of capital charges.
Energy efficient borrowers have a lower probability of default, and experience and research from the US and Canada suggests that energy efficient borrowers have a 33% lower probability of default than a conventional borrower. And again, if we can make that link in the EU, that's, if you like, would further support our case for a lower capital charge.
It's really worth to take all these additional work that has to be done to make a covered bond a green covered bond, because you will get rewarded by the market, and that in form of enlarging your investor base.
If we wanted this process to be faster, we would need to try to accelerate, i.e. increase standardization and transparency, and maybe thinking about topics that have been discussed today in giving preferential risk weightings, for example, simply to put this green initiative somewhat on a fair play level playing field with other initiatives in this banking industry.
So far, the green agenda is very much investor driven, but it remains quite niche. In a sense, and what we really want to achieve as the EMF-ECBC is to try and broaden the scope of the if you like, the sector, and really make our initiative very kind of mainstream, so to really be able to respond to the EU's energy targets for 2020 and 2030.